Hi, welcome to this video series where I answer questions from the readers of Monevator.com. Monevator is the leading UK blog for personal finance related issues. The question in this video comes from Paul, who asks, why do we need a minimal risk asset, or the lowest risk asset we can get our hands on? Now, the short answer is you don't always need this asset, but you're very likely to need it. Just taking a step back, as I explained in other videos and books, it's my view that most people are very unlikely to be able to outperform the financial markets, and as a result they can put together a very robust two-product portfolio that consists of one, an investment in the global equity markets through an index tracker typically, do this in a tax optimized way, and the second product is to invest in the lowest risk asset they can possibly get their hands on. So for most people this is typically government bonds that are highly rated in your local currency and of a maturity that suits your investment horizons. Yeah, you combine these two to match your investment risk profile, and you're sort of done. Investing can be more complex than that, but in my view, it doesn't really have to be for most people. So why do you need this minimum risk asset? Well, if your risk profile is such that the risk of the global equity markets suit you, then you don't need it. That's all you could do, or should do. Now, but for most people, that's just too risky. So they temper the risk of the global equity markets by also investing in this very low risk asset and combine the two so that they optimize for their own risk. So let's say you want a 50-50 allocation, you do need 50% of your portfolio in the minimal risk assets. In some people's case, they want all their assets to have no risk at all, and they invest only in the minimal risk assets. So I hope that answers the question. My name is Lars Kroijer. I'm a former hedge fund manager who's written a couple of books about finance, and I'm now doing these videos as a hobby. I'd say the premise of a lot of my work revolves around how incredibly hard I think it is for most people to outperform the financial markets. I explain what this means and why I think it's a hugely positive thing for people to come to understand and embrace this fact. There's more about this in my books and other videos if you're interested. But thanks a lot for watching. There are other videos in this Q&A video series, but in any case, I hope you found this one interesting.